What's up guys, Bill Hawk here. Welcome back to the channel where we talk about investing in stocks, crypto, real estate, whatever it takes to get you to hit the like button and subscribe, because that's, I'm assuming, where you get the most value. So that's my mission here, is to provide that. Today I want to be talking about one of my favorite stocks, which is Google, or Alphabet as you might know it. The reason why it's one of my favorites is because I do believe that we're in a unique time where we can buy these big tech companies that are already so big and producing massive cash flows and still growing so big at a deep discount to what they're intrinsically worth. We're gonna dive into what we believe Google is intrinsically worth, estimating the fair value so we know when to buy, our price target, when to exit, and just the stock in general. So I hope you enjoy the video. Again, if you like it, enjoy it, hit the like button, subscribe, and let's get right into it. It all started in 1995, of course, in a Stanford dorm room. That's where Larry Page met Sergey Brin, and they had a bittersweet relationship which ultimately led them to co-founding Google. The underlying problem that their search engine was trying to solve for was determining the relative importance of a specific website on the internet. And this was determined based on the incoming links or backlinks to a specific website. So the higher the number of links, the higher the ranking would be in the search engine, which back then was known as backrub. Thank God they changed that to Google later. 3 years after founding the company, or in 1998, Larry and Sergey received their first $100,000 investment and upgraded their office to a garage, which was owned by Susan Wojcicki, who was employee number 16 and now the CEO of YouTube. Today, Google has hundreds of products used by billions of people and companies, including YouTube, Google Search, Gmail, Android, and whatnot. It's a true success story and it's nothing short of inspiring. The bulk of Google's revenues and its profitability comes from its advertising services, and this is primarily driven by Google Search, YouTube, and the Google network. They basically make money from the ads that you see using these platforms, or if publishers are monetizing via Google AdWords or AdMob for mobile apps, along with other revenues which come from Google Play, which is their app store, YouTube Premium, and YouTube TV, and also hardware sales, which include Nest, Pixel, and whatnot. These are all bundled together as Google services. The other segments of Google's revenues are Google Cloud and other bets. Google Cloud has been growing at about 50% per year, and we know this is a fast growing and very profitable market from what we can see with Amazon AWS. So although they're significantly behind AWS in market share, they're growing much faster. And although Google Cloud isn't yet profitable, I'm expecting it to be very soon, which I assume in my valuation model, which we'll get to very shortly. Other bets is kind of like Google's incubator fund, which I'm not expecting to be profitable, but there are some really interesting potential home runs there, like Waymo, which is their self-driving autonomous technology, which is making some significant progress. Google's moat is pretty clear, just Google it. The fact that their brand has become a verb in everyday use speaks volumes. There is no comparison or competitor to Google Search. The race was won a long time ago between Alta Vista, Lycos, Yahoo Search. I don't know if you remember those days, but yeah, the race was already won. It's game over now. I mean, right now in Africa, they're even teaching Google as an English word.
G O G L E Gulu Gulu.
Another not so secret moat of Google right now is YouTube. So YouTubing has also become a verb. YouTubers is also a noun, plural. It's also a job description or occupation. And they've basically dominated web search, and now they're dominating video search. So this is something that honestly is quite impossible to compete with. Okay, so now for admittedly the most boring, but actually the most important part is the stock's valuation. We want to understand this part really well because we want to know when to buy and when to sell. And this helps understand the fair value of the company. If you're interested in this stuff, then I highly suggest you sign up to my newsletter. The link is in the description. I'll go over some of this stuff in more detail and you can get access to these working papers. So that being said, what I have here is essentially the different segments of Google and breaking down by the category. So you can see here Google Search, YouTube, Google Network, Google Other, Google Services, and which is basically the total of these. And then we have Google Cloud and other bets. The reason why I lay out the historicals first is to understand the growth rate. So you can see here, YouTube, for example, is growing at a monster 35%, 30% in 2019 and 2020. And then in the first quarters of 2021, they grew 49%, and Q2 was 84%, which is huge. And all the way to the right, we have the total revenues of Google in Q2 of 2021, which grew 63%. So this helps me understand and forecast the future growth. So I forecast by quarter for 2021, so Q3 and Q4, and up to 2024. And you can see here I'm just gonna minimize this for simplicity. So Google services is basically the sum of search, YouTube, network, and other, and I just minimize this for simplicity so we can look at it a little bit, and it's less intimidating, of course. So you can see here, although I'm assuming that they're gonna grow revenues 28% in 2021, which obviously means a considerable slowdown in the growth rate in the second half of the year, considering they grew 34% and 63% in the first half. I'm expecting a slowdown. This way I'm less surprised. And if analysts are surprised because they're forecasting too high, that's better for me because the price is going to come down and it's a better chance to buy. So I am looking to buy more of the stock as the price goes down, if it goes down because of analyst expectation. So in total, I'm expecting $233 billion. The consensus analyst estimate, and I like to put these in notes because I want to see where they are versus where I am, they're at $250 billion. So I always like to be below because I like to be more conservative, and that just means I have more buffer should shit hit the fan, which it just puts me in a better position as an investor. So as I always like to be more conservative. I don't need to be accurate. I'd rather be more conservative, but that's just me. And then we have 2022. Again, I checked with the consensus. I'm expecting 269 billion. Consensus for analysts is 289. So I'm well below the estimates for revenue, and I get this by breaking down the segments. So I actually know which segments I'm expecting to be growing faster and which is going to be more profitable. It just gives me a better understanding of the company. I then flow this into my discount model, and you can see here these revenues are coming directly from here. So for 2021, I said 233 billion, and over here you can see 233 billion. So these revenues are then translated after some adjustments, which I'm not going to get into in this video, to my future cash flow. And then we apply a discount rate, which I'm using 7.5% here, and I get my discounted cash flow in today's dollars. So the net present value of all those future cash flows, including the terminal value in 2025, is 2.9 trillion. And that works out to a fair value per share of $4,556. And again, I'm actually double checking my future cash flows with consensus from analysts to see where I'm at against them. I don't want to be too off. I want to be conservative, and I want to make sure that, okay, I didn't miss something here. So based on, and simply Wall Street, a site that uses analyst expectation to come to their fair value, has a 4,500 fair value. And I don't care to be super accurate with that. I just want to know, where it is. It's a check to my work to see kind of if I'm in line or if I'm not in line. I'm not trying to be close to that by any means, because sometimes I'm not. But in this case, I am. So my fair value per share is $4,500, which based on where they're trading today at $2,758, that's a 65% upside. So this is huge. This tells us how undervalued Google is. And again, this is based on all my assumptions. You can do your own work with this template, which you can get if you're on my email list. But there's no doubt to me that Google is undervalued and there's a lot of upside ahead. This is an IRR of 18%. And then what I do is I take target ratio, so price to future cash flow, price to sales, price to earnings. I take a look at where they're trading today, and I set my own targets based on historical numbers, because right now we know that the stock market is overvalued and these metrics are all inflated. So a 35 price to free cash flow is kind of high. I want to lower it to 30. 7.8 price to sales is kind of high. I want to lower it to 6.5 based on history for Google. A PE of 27 is kind of high. I'm putting it to 25. And based on those price targets in 2024, I give it a weighted average along with the fair value per share, and I get 4,200. That's my price target, and that's where I believe Google should be. That's where I would consider exiting my position, but of course I would reevaluate at that time to see what changed, because I could possibly increase my price target. So I'm not expecting it to go to 4,200 overnight, but when I put this much work into a stock, I know it's gonna get there, whether it be a year from now or 5 years from now. And this is why Google is one of my highest conviction stocks, which I plan to be overweight in. Okay, so what are the risks? And if I'm not seeing anything, then there's something wrong, because then I'm an idiot. Whatever, I'll just keep that in there. But you have to be seeing some risks. If you're investing in something and not seeing any risks, then there's something wrong. Number one is regulatory risk, and that's the risk that regulators try to break up Facebook because of antitrust legislations. And keep in mind, they haven't had any luck with this so far, but it's a threat that potentially out there. And the reason why I'm not so concerned with this is because even if they succeed and Google were to break up into pieces, the collective enterprise value of the pieces would probably exceed what it is today. The fundamentals wouldn't change, and I'm honestly just not too worried about it. Okay, number 2 is a serious risk that I am concerned with, and that's interest rate risk. Interest rate risk is going to be a risk for any tech stock right now because I think we are on an upwards trajectory in terms of rates, and they're not going to go any lower from here. The only risk of them going lower is the Delta variant. I'm not a health expert, but it's my duty as an investor to have some awareness on this topic, but I don't think Delta is a big enough threat for interest rates to go lower than they are right now. And this is going to put downwards pressure when interest rates go up on any tech stock, including Google. So this is something that we need to be aware of and be very cautious of as we allocate to Google. Although the fundamentals haven't changed, the discounted cash flow that we performed is going to yield lower fair value as interest rates go up. For me, the only way to mitigate against those risks is diversification, and that's going to be your best friend here. So is Google stock a buy from here? Absolutely yes, but that's absolutely not financial advice. What I would do here personally is dollar cost average my way in. I would go in with 1/8 my position and then go in with another 1/8, so I'm working on my way up to a quarter and then just work my way up from there. So I just started in this brand new portfolio. I put in 27 grand and I'm going to be only going up from there. I just need to find the opportune times and obviously lower my risk with the dollar cost averaging approach. So this is a brand new portfolio. I'm going to be revealing most of my trades, well, all of my trades on my email list. Some of them or most of them on YouTube, depending on how the algorithm treats me. I know that not all the stocks I want to talk about are going to be hits on YouTube or social media because it just simply won't get the views. But of course, you can help me out with that by hitting the like button and subscribing on this video. Comment, let me know what you think, so I can keep going and make the best of this and try to bring you guys the most value I can. So hope you like this video, and I will see you on the next one.